We have three messages this week. They are quite UK focused. We're going to do an update on economic data. We are going to discuss the EU referendum, and we're going to talk about the profile of UK equity fund performance. Message one, economic data. We've had a very healthy April labour market report. It tells us that 3/4 of us are in jobs, and it also tells us that unemployment rate is at a 10-year low of 5.1%. Now, wage growth is a little bit muted at 2.1%, but it beats measures of inflation. So that's good. What it tells us in whole is that we are in jobs, we are secure about it, and we are spending our money. And consumption is one of the main drivers of growth. Message two, EU referendum. Now we're on the doorstep of the EU referendum. The recent polls have shown a shift in favour of the Remain camp, and the odds have shortened at the bookmakers, which are now showing a probability of 75 to 85% of Remain compared to 60 to 70% previously. And it's also reflected in the market. Now the most vulnerable thing has been sterling, and that's traded off the lows. But I want to be clear to say that even though the risk premium has reduced, it hasn't vanished entirely. You know that our portfolios are positioned in favour of Remain, but we continue to monitor the market for opportunities in the run-up and after the vote. Message three, UK fund performance. Now we've had a style shift in UK equity performance this year. Most UK equity funds have a medium to small company and a growth orientation bias, and they've performed well over the last few years. But what we've seen in 2016 is that performance has been driven by larger, mature FTSE 100 companies and those with a value bias, or the commodity-related stocks which have been cheap and unloved. It also means that the UK equity funds have largely underperformed the FTSE 100. It also means that the UK equity portion of our portfolios, especially when overlaid with the Brexit uncertainty, have been a performance detractor. This has been offset by the non-UK portion of our portfolios, which is fairly large and has put us on the forefront, and we have outperformed our peers on that front.